if anybody is watching this that's thinking about IBC, my suggestion to them is just do it, get started. And really, when Nelson called it infinite banking, I mean, I'm learning something all the time. And that's something else Nelson would always say. He'd said, living like this makes life so easy.
Well, Paul, thank you for joining us today on the Infinite Banking Initiative. And we just want to start off from the beginning. When did you meet Nelson Nash?
It's interesting. I took a trip with a group of faculty after the Berlin Wall came down. And so we went to Poland and to Lithuania. And I took a journal with me and took notes. And I had just gotten involved with fee that year. And so I got back and I wrote a little article about some of my experiences on Poland. I thought it would be great for the Freeman. Sent it off, and sure enough, they published it. So it was published in November of 91. As soon as it came out, I got a phone call in my office from Nelson. Of course, he was a huge fee supporter and loved Leonard Read and would read the Freeman front to back as soon as he got it. And so he called me. He said, "We need to get together for lunch." And I said, "Oh, well, that'd be great." And so that was the start of a very great friendship, and Nelson serving as one of my many great mentors in my life. And so that's how it all started.
Okay. And you are actually mentioned in the acknowledgments of becoming your own banker. He says, a special thanks to Paul Cleveland for your expert assistance in proofreading this manuscript. So tell us about that. What was the process of the book? And you're involved in that
Right.
process.
So Nelson, I- I'll be honest. As far as IBC was concerned, I was kind of the tough nut to crack. Here I am. I'm teaching finance at Birmingham Southern College, and that was one of my fields of specialty, getting my PhD, and so when he's talking about whole life insurance, I'm like, I don't know, and the truth was though, I didn't know anything about it. I'd never had a class on insurance or understood it really. And so he invited me to, come to some of his early presentations. And the more I thought about it, I was like, this could work. And I was trying to do it, through the market. And quite frankly, I was getting nowhere. Trying to use mutual funds and the like. And I really was getting nowhere. And so we were living kind of that standard life, except on a professor's salary. So very little money. And so I finally thought, what the heck? I'm just going to plunge, into this. And so I set up my first little policy with Nelson, and we were off to the races, at that point. Um, and I didn't even know what I was getting into, but he continued to teach me and work with me on it, and trusted me enough to go back and read through what he's doing and do some editorial work and that sort of stuff, which I was glad to do because the more I got into it, the more I realized, hey, this is working. This is working.
Didn't you proofread the arrival syndrome when you help him with the book?
Yeah. Oh, yeah. A lot of that stuff. And, because he didn't have that when he was first teaching me. Uh, or it was in a very early stage at that point. And so, but I remember the first time I used my policy, and it was, it kind of just blew me away. So what had happened is I had to replace a heating and air conditioning unit. And so this was going to be like a $3,000, $3,500 expense at the time. It's a lot more than that now. So I'm like, okay, good grief. So I called Nelson. I said, Nelson, because I'd only been in the policy like now 3 or 4 years. Nelson, do I have enough cash value there? He said, oh, sure. I'll, I'll get them to cut you a check. And so, we're working with a company that was going to put it in, and they came and they said, well, Mr. Cleveland, how do you want to pay for this? We have some financing deals. And, but I said, do you take MasterCard? And they said, well, yeah, we do, but we can give you a better rate. And I said, I don't care about the rate because I'm not going to pay any interest on it, but I had a Shell card at the time, and I can use the $35 worth of gas. So that was my first start. Well, now I can amortize a lot. All right. So I knew how to do that. So it's like, okay, I'm going to follow Nelson, what Nelson's been teaching. I'm going to pay this loan off over time. And so I started doing that, and I'm like, man, this is working great. But then, for Kathy and I, we're in a situation where we always had the good car, her car, and the beater, my car. And so and we always owed money on the good car. And because we had to take out a loan to buy it like everybody else does. And so I was paying, back the AC heating unit for a while, and I was like, I bet I have money to pay off this loan. And sure enough, so I borrowed money back out, paid off the auto loan, and and then I just put all that money plus some and started paying off that loan. And so the next time we were car shopping, went in, I started, we made the deal, and it was like, I was only like, I think $2,500 short of being able to pay the whole thing using my policy. And here's what I did, one of the dumbest things I've done with IBC. They asked me how long I wanted to finance it, and I said, well, let's just do 2 years. And absolute mistake. I should have gone as long as they would have gone and minimized the monthly payments to the bank, use that money to pay my loan back, and I could have paid the car off faster that way. And so that was a hindsight lesson that I learned from doing this. So that worked out really well. And so from that point forward, I've never had an automobile loan. We own the titles outright, and we're going on with life. And so that part was great. So I'm using it for, personal finance. I think the big switch was, starting my business and self-publishing my first book. And that took place in 2003. And so we're able to just borrow the money out, print the book up. We actually broke even on that book really quick, like in the first 3 or 4 months. So now, my business is going, and which is great. And so, it's been kind of like one step at a time along life's road.
So what's your primary focus on the business right now?
One other thing, and I should have, I guess, mentioned this. Nelson was on the board of directors for Clarence Carson, and Clarence was a historian in self-publishing. And Nelson invited me to go to one of the board meetings. I was actually familiar with Clarence Carson's work. He was part of the editorial board for Fee. Not only that, but when I took that original trip, I called Fee and I said, y'all have some free market stuff that I can take with me to hand out in Poland and Lithuania. And they said, sure. They sent me a whole stack of essays of a single essay that was written by Clarence. So, and one of the things I'd read, so as soon as Nelson mentioned that, I was all over it. Yeah, I'm aware of this guy. Yeah, I'd love to meet him. And through that, actually became a board member myself. And it was Clarence that got me to write that book. And I thought we would just publish it in that format. But when I was finished with the manuscript, Clarence met with me and he said, "Paul, I think you need to find another publisher." Hooray. Got about 2-3 years worth of invested in this. And but I know why he did it in hindsight. His health was failing, and he had also lost his biggest reseller. And so he just knew we wouldn't do well. And actually, the reality is when we made the decision to launch the business, we were just like 2 or 3 weeks out from getting the delivery of that book. The title of it is Understanding the Modern Culture Wars, and it's in the essentials of Western civilization. And I had dedicated the book to Clarence. And the kind of the thing that was sad for me is I was not able to give him a copy of it before he passed. But I was at the funeral able to give a copy of that book to Murtis. And and Nelson and I did the eulogy. We actually did the funeral for Clarence. So Clarence was a huge mentor for me. And Murtis passed away not that many years after. And Mike and Evelyn was, Clarence and Murtis have 2 daughters, Evelyn and Melissa. Melissa was not really interested in the book business at all. Evelyn somewhat, but, they were kind of, Evelyn's doing her own thing. And Mike's kind of running, selling Clarence's books. And the econ book that Clarence had written back in the 1980s was really out of date because he did his whole section, the whole last section, tracing different types of political economy and history. And in that book, because it was written in the 80s, the Soviet Union still existed. And so it needed a lot of work. So I went to Mike and Evelyn and I asked them if they would turn that book over to me and I'd pay them royalties. And they jumped all over it and said, sure. So we did a 3rd edition update on that book. And we're pretty successful with it. Then Evelyn and Mike, her job took her out to California. So at that point, I asked, I said, well, would you mind if I kind of kept the business going? And they were like, yeah, absolutely, do that. Well, one thing, one step at a time. And I finally suggested, would y'all mind signing over to us, our company, the copyrights and the publication rights for all of these books, and we'll pay you royalties under our contract. And they were just like, oh, absolutely, let's do that. So that really set the stage for us to have a business and really to begin to move forward. And I forgot the exact date we did that, but it was about, I would say that's probably 6-7 years ago at this point. And Boundary Stone, and so what we're trying to keep all this stuff alive. Kathy had taught it, was part of a co-op teaching homeschool students economics and government at the co-op. And so because she did that, she laid out a master plan for the thing. So she's developed a course for each of those subjects. So now we have the books, and we updated the econ book one more time, so it's in the 4th edition now, and it's really more accessible, textbookish type book at this point for students. And we're having a lot of success with those. We sell quite a few, pack course bundles for, the homeschool mom will buy the course bundle, which includes the book. It'll include the online course, and the online course is set up so it self-pays, so the student can just work through it on their own. And the homeschool mom can be as active in it as she would like, or just monitor the situation, make sure they get through. And so they're built in quizzes and exams. So it's really working pretty well.
Yeah, it seems like the homeschooling industry is really taken off.
Yeah. One thing, if there was one good outcome from COVID, it was that the schools sent all the kids home and the parents got to see what kinds of crap they were doing in these government schools. And so that was a big advantage for us because it's horrid. The history they're getting is really bad. And so, that was the thing about Clarence. I mean, Clarence was a first-rate scholar. And so now we're trying to do this with the American history as well, because that was that was his style. And, so we want to do it well. We want the content to go forward. And so we're really trying to be intentional about scaling up this business at this point, because I'm not getting any younger, and we know what kinds of help we need, and so that's the thing that we're trying to focus on now.
Did you finance your boundary stone with your policies?
Oh, of course, yeah, absolutely. The whole thing. In fact, on the books, we're 100% debt finance, which I like a lot, because then we just write the interest off income every year. So that to borrow there and to loan to the business, that does work great. And so as soon as we get the history set done, and we're ready to print, it's probably going to be I don't know, I think it's going to be around a $20,000 investment. And at that point, what we'll do is, I'll just borrow the money out. We'll have it printed up, and Boundary Stone will pay interest over time. IBC really, as I think about my business, the IBC was the perfect vehicle for, if you're entrepreneurial at all, this is the only way to finance it. Because, if you're going to the bank, that's not going to work well in the long run. And in fact, in teaching finance, I tell students this a lot, that one of the problems with startup businesses is they don't have enough financing. And let's say they have a good product and they're growing rapidly, and they're running back to their bank to get an increase in their line of credit. And, eventually the bank will cut them off, because the financial risk is getting too big for them. And that's the worst time to try to go look for equity, because they'll take advantage of it.
I've invited you to speak at several think tank events, and you're always a big hit.
Oh, I tell you, I used to love to go to them with Nelson. So I've heard it, not only did I hear it in its infant stages when he was invited me to, one of these events. I think it was Nelson presenting IBC, and there were like 3 or 4 of us listening. But
yeah, it was back in the day.
But he was fine tuning it, and that was back in the day, right? But so once he got it down, boy, it was I heard that one quite a few times. It's so much fun traveling too, because I remember we did one up in in Pennsylvania. What's his name? He's in just south of Harrisburg in the Amish region.
Charles.
Yeah, Charles. Yeah.
Charles Griffin.
Yeah,
Griffith.
Charles.
Yeah.
And anyway, so we stayed with the Griffins, and so it was a lot of fun. So it's Charles, his wife, I guess, has passed now. She was there, and then Mary, of course, and Nelson were there. We just had the best time sitting around in the evening after it's over, or in the morning, drinking coffee before we're going over there. So it was always just a lot of fun. So it wasn't always just about doing the presentation, but other things as well. And that's where I think deeper friendships are really made. And I treasure all those times.
Nelson was all about that. I told one story before where if he had a seminar he was doing in Dallas, Texas, then he'd just drop in, and everybody he knew in Dallas, Texas metropolitan area,
right
before or after the seminar.
Nelson was not shy about contacting somebody he wanted to meet with. That's for sure.
Phone calls like, "Hey, how you doing? Oh, great, good talking to you. Yeah, mind if I stop by and say hi? Sure. When do you want to come by? Well, I'm outside in my car right
now. Here's one of those stories that he shared with me. So, he's always after talking with economists, right? That was big on his list, especially economists he liked. He loved Walter Williams, which I did too. Walter was fantastic, but relative to Walter Williams, I was a nobody in terms of the economics world. And so actually picking up the phone and calling Walter Williams up and going, "Oh, I'd just like to come in and chat." I'm not sure I would have, had the gumption to do that. Now, not Nelson. If I want to speak to him, I'm gonna give him a call. And sure enough, Walter. Actually, I probably should have had more gumption to do the same thing because Walter was a very kind man, and would be quite happy to meet with junior faculty who share his values. I guess having read so much of Walter's work would have been just intimidating for me because and also, I've gotten so many great analogies from him that I've used in my own lectures, and a great sense of humor. And so, and he did that also with Yuri Maltsev. And here's another guy. I love Yuri's writing. I mean, funny guy, really funny guy. And I've had opportunities to listen to Yuri give lectures down at the Mises Institute or other places. And once again, and I've always tried to emulate that, bring a sense of humor into the topic. Because, I think a lot of times we take ourselves way too seriously in this world. And a little humor is not a bad thing to have.
Going back to academia really quick, when you're talking about Walter Williams, I took like 3 history courses in my college career, and the first one was Colonial American History by Ralph Raico. He was a faculty member. This is 1973, okay, and I didn't know who this guy was. And so I was just a real avid, I was like a Kenneth Roberts history, but he wrote, Northwest Passage and all those historical dramas back in the 60s and 70s. And so I just love that history part. So I went to learn that. And next thing I know, I'm sitting in this class and we're learning about, how we've thrown the Constitution out the window and this and that and this and that. This is 1973, and he really kind of changed my dynamic without even knowing who this guy was. Um, you know, and then it was kind of the same thing with Nelson Nash. You know, obviously I married into his family, but it's like, you know, same thing way back when. It's like life insurance. Here you go, sign this policy. If you want to join the family, you're going to be insured, and your wife's going to be the beneficiary. It's like, okay, yep, okay, yep, okay. So I get the same exposure from that history point of view that from Professor Rako, and then from Professor Nash too, from the finance side of the house. So,
well, it's so interesting how certain threads lead you in particular directions in life, because getting involved with fee actually started the one year I was down in Florida, in Orlando. And, I went to my first conference there at fee. It was, I think, in maybe spring, early summer of 1990. And it was put together by Ed Opitz. Ed was a congregational pastor, but was full-time at fee. And I got to know Ed, and it was just like, this important relationship that I had with Ed, and that began the whole thing with fee. And if that had not happened, I would probably never have ended up
with the Freeman.
Yeah.
So Nelson forced his way into your life because he saw that you got it, okay, and then he introduced you to Clarence Carson, blah blah blah. So Nelson was a self-professed Austrian, and his mentor was Leonard Reed. So Nelson says that IBC is Austrian economics in action.
Yeah, I think there's a lot. Yeah, I think there's a lot of truth to that, because you're establishing your own independence monetarily. And I think that's one thing that people don't get, that once you create these policies and you have that cash value, that's real money, and you cannot inflate it. I can only borrow up to my cash value.
95% maybe.
Yeah, but right. But the thing is, all of a sudden you're thinking, okay, I'm paying this back. I got to start another policy. Yeah.
You've reached your capability. So what's the difference between why do you say that a policy loan is real money, or so you're saying it's not fiat money?
It's not
right?
fiat in this. I mean, it's done with fiat money, right? In other words, we're setting this thing up using it because there's no other money out there in the United States to work with. I remember at one of the events that I did, somebody brought the question up because it's a problem. The problem of the Federal Reserve inflating the money supply. Okay. Well, if that's not completely offset by increased production or technological advances that increase productivity and that sort of thing, then it's going to raise prices. I mean, that's obvious to anybody. Even Friedman said money is always everywhere a monetary phenomenon. Inflation is always everywhere monetary phenomenon, and he's right. But but he was wrong about the Fed just replacing money in terms of a credit contraction and not realizing that it was the credit expansion that was the law. And I think that's where the Austrians get it right. But with the policy, all right, so I can borrow out, but I've got to create that, right? In other words, I got to create that cash value by actually saving, right, for the future. That's the only way to do it. I've got to save. And in terms of saving, the IBC, okay, you know, and Nelson was really clear about this. He's saying, you know, he's telling people, they're going, oh, well, the interest rate's so low in that. Well, yeah, but it's not taxed. You know, it's growing tax-free. You're going to get your money out tax-free. And you can use it through borrowing. So you can finance all sorts of stuff. And if you don't steal it from yourself, the whole thing's going to grow. In fact, it's
because of uninterrupted compounding.
Yeah.
Yeah.
It's in the contract. It's got to grow. So, you know, so I guess the next two policies I took out is I took out one on each of our children. So one on Caleb and one on Katie. I think I did that. I forgot. I think Caleb was maybe 6 and Katie would have been 4 when I took out their policies. And they were small. So last year, I've figured out a way where I could transfer ownership over to them without incurring the tax penalties from the gift stuff. So, you know, we got that done. Now, there's still I need to pay back some loan to them that I took out on it to make it happen.
No, they own the policy, they own the loan.
Well,
it's a package deal. Come on.
But you know, the total cash value of the things would right now probably $50,000 each. So they're in a situation where they're starting out. You know, they now have young families, the whole bit, but they're starting out their situation way ahead of the game. And Caleb has taken to this straight off, and he's got his own policies now that he's doing. So he's figured this one out and how to use it, how to begin to use it to create financial independence for himself. Katie and my son-in-law James, I think they're starting to get a hold on this one and getting it down as well. So that is going to be great for them. They're going to be able to do things that I was never able to do really over time.
Well, you know, I'm a big advocate of the generational wealth thing. That's kind of my focus.
Well, that's the next thing that I need to do at some point is now I've got 3 grandchildren, 1 on the way, and I've got to, take out policies on all of them. So that's the next step for me, probably. In this.
Absolutely.
Oh yeah.
There's always room for more.
Yeah. And I took out I guess, I don't know, 7 years ago I took out a pretty big one on myself. Kathy is not insurable because of her MS. But so right now I've got 3 policies on myself. The last one being the biggest one I've ever taken out. And so I'm just at the point of break even on it. This is a 7-year out thing. And then this one is going to really start to crank here before too long. So that compound interest is going to get serious here on this one. And the good news is that that's going to give us enough money, I think, to that and with the cash values I have in the other policies to really, I'm not concerned about financing growth in Boundary Stone right now, because I think we can handle a lot of growth without any problem. That to me is, and I can take care of, other financial needs or wants that I have going forward. Now, I thought about what Nelson did with you guys, allowing you to lease to him cars and houses, and I thought about that one. That that that's not a bad deal.
Yeah, like I always say that our family was a guinea pig for 2 chapters in the book. Okay, the one talking about the twin sisters with the leasing company leasing Lexuses,
Right.
because that's what we did, man.
Well, didn't y'all lease him a
And then also
plane too at one point?
say again.
Didn't y'all lease him a plane at one point?
Oh yeah, it was several planes.
Yeah.
I mean, when you say we leased them to him, I didn't find out about that until I got my annual renewal notice, and I noticed there was a substantial policy loan on it. It's like, where'd that come from?
Yeah. Yeah.
Yeah.
Yeah, and he had a way of talking about it too. I guess it was Barry that bought his house from him, right? He charged him a lot for his office space.
Yeah.
Separate.
Yeah.
Said, now Mary got a great deal for the upstairs, but he really stuck it to me.
Yeah, I guess I shouldn't be laughing about that, but yeah, that's something I forgot about completely. Yeah, I tell the story about us buying this house from Nelson. Well, we actually bought it from
Barry.
his son.
Yeah.
Yeah, because Nelson didn't want to own anything.
I know. I mean, that was his. I heard him say that on many occasions. I want to die with zero net worth.
Yep. It's pretty easy to handle an estate when that happens, right?
Not much probating in there. I tell you, the thing that I really treasured, and I wish I had done it more often, is getting together with him to go out to lunch. And every lunch we had, it was always, but we'll focus on the new thing he's read. Paul, have you read about this? Oh, no. And I'm sure you can tell me all about it. And I mean, it was just so much fun to do that. And in the board meetings, so see, we go to the board meetings, and so it's always Nelson and Mary, of course, and I'd be riding with them, and we just, it would just, because they were always like over in Anniston, or down where Clarence lived, or someplace like that. So it's always like an hour or so there, an hour or so back, and so you get a lot of time, to get to know each other and to talk and share a little humor, a few jokes, and all that sort of stuff. So I always had to go and look for my best jokes to, tell Nelson.
Well, I think we have we've covered everything that we wanted to cover with you, Paul. Is there anything else that you wanted to share?
If anybody is watching this that's thinking about IBC, my suggestion to them is just do it. Get started. And really, when Nelson called it infinite banking, I mean, I'm learning something all the time, or seeing things in a way I hadn't seen them before. That, it's like the story I told you about reflecting back. Why in the world did I do 2 years instead of 5 on a loan on that car? Because that would have just lowered my payment. I would have paid more to my policy, that I could have borrowed back out quicker and paid off the difference. Little things like that make your life better, and that allow you to live freer. I remember when Birmingham Southern now went out of business this past year, but it was all due to a guy who nearly bankrupted it. It nearly bankrupted for good 2010. If it weren't for IBC, I'd be living in Colorado right now. Because if I was just focusing my financial freedom on what I was getting paid by a college or university, I could not have afforded to stay at Birmingham Southern. But as a matter of fact, I had a great offer at Colorado Christian University. And the president there, Bill Armstrong at the time, really wanted me to come. He loved my work. He loved Clarence's work. And he really wanted me to come up there. And so much so, I had developed their general ed econ class. And so 2010, Kathy could still stand up a little, and we flew out there with Katie. She would be a senior in high school. And Bill was making me a great offer to come. And so we even went out with a real estate agent to look around at homes, places where we might want to live. We got back, and I was going back out in January to give a lecture to launch that econ class I developed, because it was the first time they would teach it. And so Kathy was supposed to have an MRI done that day that I flew out there. And that was supposed to be in the morning. I was at the airport. It was around noon that time. So it had been about 1 o'clock back here. And I was waiting for the shuttle to go rent a car. And so I called Kathy and I said, well, how'd the MRI go? And she goes, well, I didn't have it done. I said, you didn't have it done? Why not? And she said, well, I couldn't stretch my legs out enough for them to put me in the machine. I said, well, what are you going to do? She said, well, I'm stretching out here at home this morning, or when we got back. And this afternoon, Helen's going to come back and take me back down to the hospital to see if it's enough. And when she said that, it was like God took a bat upside my head. It was like, Paul, who do you know in Denver who would do this for you? You know, we'd been in Birmingham at that point 20 years. We were plugged in with all sorts of people at our church and that sort of thing. And it was a soul-searching drive over to Lakewood. It's a 45-minute drive. And the discussion I imagined I'd be having with Bill about the details of my position did a 180. And I told Bill, I said, this would be great for me, but I'm not sure it's the right situation for Kathy. And he totally understood. So it was like, well, I'm just going to take a chance to stay. And of course, Bill was very gracious. He said, look, if it doesn't work out, if you need a position, come back to it. We're always here. And so I had that in the bag. But so Birmingham Southern hired the general. I was never more impressed with a man. He was as much honest and upfront as the guy before was dishonest and a trust breaker. So I thought, well, we're going to stick it out. And it was the right, looking back, it was absolutely the right move. My business is here, everything's here. And but IBC allowed me, my business, actually that year was one of the biggest years, that 2010, 2011 was one of my biggest years in my little business. I actually bought a car, even though things looked dim. So, I mean, and I had the freedom to make those kinds of choices. Well, you can't get that freedom if you're depending upon your paycheck, right? If that's all you got going for you and you're out to the hilt, good luck with that. And I see, it's like in America, you can't tell who has money and who doesn't. There are places, in Birmingham that they all look wealthy because they're all living in very nice homes. But some of those people don't own anything. They're mortgaged out to the hilt. They're living on a big paycheck. And if that paycheck goes away, it all goes away. I remember a friend of mine who was Andy Martin, he was president of First Protective for a while. He's now on his own and doing a different thing. but Andy's kids were having fun with all the toys of one of their neighbors, and Andy was wondering, well, how they afford that. Now Andy owned his house. I mean, I just know Andy. He owned his house, and then he was at a soccer game or something, and it turned out the guy didn't own anything. He had a big paycheck. So, and I think there's a lot of that, and that brings stress. That's one thing I don't want to deal with. It's a bunch of stress in my life. I don't need it. Much happier not to be so stressed out. There's enough confusion out there now. So now I guess that would be my other story. Yeah. It'll lower the stress level. And that's something else Nelson would always say. He'd said, living like this makes life so easy. It just makes life easy. And really, I think the way God intended it should be. It's not that I'm depending on all of it, but and depending on God, but He wants us to be wise about, finances and that sort of thing. And this is slow and sure. And everywhere I see in Scripture, he who gathers a little by little, make it last. And that one's, you can take that to the bank, every time.
Absolutely. Thank you, Paul, for sharing so many great stories about your time with Nelson. You certainly had, an interesting and long relationship with him, and unique. And we appreciate you sharing some of that with us and our listeners and viewers.